Hello, in this presentation, we will record the tracking and paying of bills in our bookkeeping problem in Excel, keeping in mind how that same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. First, we're going to take a quick look at QuickBooks and then jump over to Excel and enter this information into it. We see here the vendor section of the home page of QuickBooks, and we're looking at the flowchart, the typical flowchart that would happen, and that would be that we would have a bill, we would enter those bills, and then we would typically pay the bills. The nice thing about QuickBooks is if we do this process, then we can have all the bills that we're going to input at one time, and we can put the bills in the system at the point in time that they have been received, and not put them in time as when we pay them, not have to wait, in other words, until we pay them. And that should be closer in time to when we actually incurred the bill and closer in time to when we should be putting it in there in accordance with the matching principle. So typically we're going to enter the bills and then we're going to pay the bills. We're going to be over here on the payment bills side. That's going to be the transactions we will record. We could go through the process up here too, and that deals with the same kind of idea of, except of course, this dealing with the purchase of inventory rather than just paying normal types of bill like the utility bills and whatnot. So if we do that, if we click on the pay bills, we see an icon like this. Now this is nice because if it would list like a lot of different, whatever bills that we have input, of course, and then we can just tick and tie off which ones we want to pay. So we can go through here and say I want to pay this one or I don't want to pay another one. And when we do this, what will happen is QuickBooks, if we tell it to, will assign and print checks that we can print out of the system, or we can assign our own check numbers. But in essence, these are generating checks by selecting the bills that had previously been input into the system. If we were to say, okay, it would print those out. What would that do? Well, we're talking about checks. So of course we would be decreasing the checking account, and the other side would be recorded into the accounts payable account. That's what these checks will do. That's what the pay bill will do. When we say pay bills, of course, the only way that will happen is that there's something already. The only way, in other words, we would see items listed here is if they were in the pay bill items in the accounts payable section. And then when we select them, it's going to decrease the accounts payable and write the check. Let's see the journal entry in Excel. One more point we do want to point out here, and that is that it does list the vendor. So once we have the vendor, of course, QuickBooks will be able to tie out who it is that we paid and therefore no longer pay. We will have to track that as we record this into Excel, into a subsidiary ledger for the accounts payable account. So here we are, we're going to record this transaction. We'll go through our set of questions as we do so. Let's put the date first. Let's do that first. I'm going to scroll down. I'm going to put the date down here in the next open area, which is in F29, the date being the date of the check 2/21. That's what we're going to put these checks as. Then we're going to scroll back up. We're going to ask our normal questions when recording a transaction. That first question is cash affected? And we're going to say, yes, it's affected because we're making a payment, we're paying the bills, and therefore it's going to go down. It is going out of the checking account too because we're writing it from the checking account, we're writing checks. So the checking account has a debit balance. We need to make it go down because we're writing checks, so we will do the opposite thing, in this case, a credit. Copying the checking account, scrolling down, here's the debit, or here's the date. We're going to put it underneath the date, right click and paste 123. The amount's going to be for the amount that we're paying the check for, which is going to be, in this case, a credit of 168. We'll then need a debit of something. And there's a tendency, in this case, we're paying vendor, is our vendor that we're paying, to think that of what we're paying for, in this case, inventory, and think that we have to debit inventory. But remember, we already debited inventory before. Right now, what we're doing is saying we owe vendor money, and that means that it would be in the accounts payable section represented we owe them money. So here's how much we owe to all vendors, and we're going to reduce that amount to the amount we paid off to one vendor, that being Fender the vendor. So we're going to debit this amount to decrease it. That's a credit. We need it to go down because we paid it off and we don't owe as much anymore. Therefore, we will do the opposite thing to it. In this case, a debit. So we'll copy the accounts payable. Scroll down, put that on top. It's in G29. Right click and paste 123. Then I'm going to indent the second one, the credit, by clicking on the checking account, home tab, alignment group, increase the indentation. This is our journal entry that we just journalized in the general ledger, and now we will post it to we just journalized it in the general journal, and we'll now post it to the general ledger. Then we'll update the subsidiary ledger for accounts payable. So one step at a time, we'll take this accounts payable and post it to the general ledger. First, we're going to freeze the panes to lessen the pain of posting, going to cell AJ1, then going to the tabs up top, looking View tab. And then the groups will be Windows Group, Freeze Panes, and Freeze Panes. Scrolling down, we see that we're trying to record this accounts payable again down here. And we see that that's going to be the first orange account, our first liability. It will then be the first orange account, our first liability in the general ledger as well. Scrolling to the left to find that first orange account, the first liability. There it is. We are in cell AZ17. AZ17. We want to pick up in AZ17 that 168. And apologize, but it should be AY in the debit side. AY17. We're going to pick up that 168. So we're going to select equals and scroll down just a bit and point to that 168 and enter. That brings the balance to 1,200. That same 1,200 then should be over here on the trial balance as well. There's the 1,200. Now we're going to record the other side. Notice we're out of balance, of course, by the 168. Now we're going to record the amount to the checking account. There it is in the checking account, or there's the credit that we're going to credit to the checking account in the general journal. Here's the checking account on the trial balance, first account. Here it is on the general ledger, first account. We are going to credit it, so we're going to be on this side in AN12. So I'm going to scroll down just a bit, and so we need to pick up that number. So what we're going to do is be on AN12, say equals, scroll down a bit, pick up that number, 168. Let's do that now. We're on AN12 equals, scrolling down just a bit, picking up that number, 168, enter. And that brings the balance to 104,626. That same amount should be found on the trial balance, 104,626. We should be back in balance as we are down here. Now we're going to see what we can do for the subsidiary ledger. Note we brought down the general ledger or the accounts payable. We need to record this amount in the subsidiary ledger as well. Why? Because this amount represents what we owe to people. We need to know who we owe to. We don't get that kind of detail in the general ledger, which we've just posted to. It's in order by date, not by who we owe, by vendor. So let's scroll to the right. We're going to take a scroll to the right until we find the subsidiary ledgers for the accounts payable. We're just strolling over and scrolling to the right. Nice relaxing scroll until we get to the columns of AZ to DF. AZ to DF, we're looking for a specific vendor within the accounts payable subsidiary ledger, that being Fender, the vendor. And we're going to be here, and we're just going to post this again. It's a debit. We obviously are showing that Fender owes us we owe Fender $168. We paid Fender, and therefore it's going to go down with a debit. So in cell DD8, we're going to say that that equals that in H29, enter, and there we have it. So that brings it back down. And if we were to add all these up and add up all the vendors, it adds up to just that 1,200 for Epiphone. That then also should be the amount found on the trial balance and the general ledger. Let's see if that's the case. I'm going to do this a little bit quicker. We're going to click just on the left-hand side of the frozen panes, and then we'll click just right, and that should pop on over to the trial balance, and we see in accounts payable 1,200 looks good. Now we just want to check and see what happened to the financial statements, and that'll be it. We did something to the checking account, so I'm just going to point to that on the financials and see what happens to them, what we did to them. And then we're also going to say we did something to accounts payable, so let's point that over to the financials. And then let's take a scroll over to the financials. We're just going to take a scroll to the financials on the right. Here they are in columns BW to C right there. So then we're going to say that cash has changed. Accounts payable has changed. They've been updated. Looks good. Total assets should hopefully still equal liabilities and equity. Does. If we scroll down, nothing happened to the income statement because although we spent cash, we didn't have an expense at that point in time. We were paying off what we owed, and therefore there's no income or expense at that point. We will expense what we bought, which was inventory, at the point in time we sell it in the form of cost of goods sold. So we have that same net income, that big $54 that we currently have, income minus expenses, revenue minus expenses on the income statement for the second month so far. Remember that this is only the second month, it's not the 2 months. If you're looking at another example of this problem and it's got 2 months worth of data, that's why it's different, because this is just February. And then that is going to be included in the calculation of the statement of owner's equity to get to the ending balance of $144,229. That amount also found on the balance sheet, $144,229, to help us be in balance.